Hello, everyone. This is the recorded version of our first lecture, week one. Uh, Today, we'll be going over some of the introductory topics of stock trading and investing and some of the basic terminology involved. All right, so why is this course the best for you? So I've personally taken a few online courses, as I'm currently a high schooler. I've taken a few online courses regarding finance and investment, portfolio management. And what I've found is that there's a lot of outside information that I thought would be um, necessary to be shaved off when talking about investing or trading, right? So we were talking about insurance, we're talking about some unnecessary microeconomic concepts, and I just thought that, for those who are trying to learn to invest or trade, why do we need to learn this information, right? So I decided to shave it all off, make everything as concise as possible into this one course. Okay, so there are a few truths and reasons to trading, right? So most people, as you may have heard, lose money in the short run. There are some unproven statistics out there saying that 70 to 80% of people lose overall. But I would say that's quite false. I think when you're looking at the short run, that may be true. However, the thing about that is that there's no aggregate measure of how many people lose versus how many people gain. That's all up to the brokerage accounts, the account holders, and the firms managing those accounts. Um, in terms of listening to other people speak about stocks or the stock market, I would not really recommend listening to them, right? So even me as a student, I'm also a learner, right? So I'm constantly learning finance, except I'm only teaching the elementary concepts of finance, right? If you're hearing someone talk about an individual stock, let's say Tesla, I would say that he or she is wrong, almost always wrong, right? This kind of goes into the concept saying that the news is always outdated, right? Like some people, they always say like, oh, the news said this about the coronavirus, like the stock price is already going to go, like the stock price is going to go down. No, the stock price has already gone down. Like to think about the time that it took for the information to be printed out and then directed to the broadcaster and then shared to the report, like between the reporter, the station, right? So there's a lot that goes on, a lot of time involved getting information to your screen. So never listen to the news. All the news is always outdated. Just remember that. Um, yes. So next thing is that everyone, you will have losses. That goes for everyone, right? So this doesn't mean that you're going to have a net loss, meaning that you're not going to go into trading all gung ho and excited, and you're just going to come out negative. No, that's not going to happen, or hopefully it will. But you're going to have to experience losses to learn, right? So even the best investment professionals in the world, the best fund managers, for example, the Magellan Mutual Fund in Fidelity Investment, they lost money too, right? Some of their investments did not perform as well as anticipated, and they had a loss. What that didn't mean though was that there wasn't a net loss, right? That mutual fund, the Magellan Fund, that was the best performing mutual fund, I think, around the 80s and 90s, and I think overall they had a 20% increase some years, and I think only maybe 3 or 4 years where they turned out negative. But overall, they had a huge capital gain, right? So yeah, that actually brings me finally to this saying: money frees you from doing things you dislike. Since I dislike doing nearly everything, money is handy. That's from Groucho Marx, and Groucho Marx was a comedian. He died in the late 70s, but he was not an investment professional. But what he says actually really sticks to me. Um, you know, Trading and investing, it's a very confusing topic. A lot of people talk about finance, acting like they know what they talk about. They spit out a few high vocabulary or high level vocabulary words, but overall, when you're trying to learn trading and investing or any avenue down finance, there's a lot that you need to know, right? It's not fun. I'm gonna be honest, it's not fun to learn how to trade or invest when you're actively doing it. When you see the capital gains that you're making or actually losing, um, there's a lot that actually um, comes to mind, right? Like you're not gonna be um, super mentally or have super mental fortitude. You're not gonna be like, oh, robot style. You're not going to go from one trade to the next, make perfect analysis. You're not going to sell at the perfect exit point. right? Except the thing about trading though is that it all can become fun. It can become fun for you, right? So yeah, if you want to trade, then go right ahead, right? If you are above 18, I would recommend that you make an account right now, except I would recommend going paper trading first, meaning not trading your own real money. Yeah, so I think trading and investing, in my opinion, this is actually kind of my motivation for pursuing finance, is that although it's a very strenuous task in learning from your mistakes, etc., it will actually provide you financial freedom. And this is actually the appeal to many actually of my viewers actually probably. All right, moving on, is trading right for you? Well, first off, of course, are you of legal age to have an account or an individual brokerage account, right? So you have to be 18, right, to have an account. But if you are under 18, you can still trade under your parents' account in what's called a custodial brokerage account. Um, you'll have to talk to your parents about this, but in the case that they do allow you to, I wouldn't recommend diving right into it. I would recommend watching the next few videos or finishing the videos in this course while also having some practice paper trading or trading fake money. The next few, these are very mental things, right? Do you get angry easily, right? So do you get mad at yourself? Do you get mad at others once you make a loss? Or this could actually be in any scenario, right? Like when you're in a social scenario, how do you react when there's adversity between two people, right? If there's a conflict, how do you engage? Or do you even engage, right? So you'll have to keep in mind, are you going to freak out when you suddenly see losses in your account? Like, are you going to suddenly sell? Are you going to have like some impulses? If that's the case, I would not say that trading is right for you. That's not to say that you should stay away from trading and investing entirely. I would say that you have to manage yourself, your emotions, and practice that through small volume trading. So I wouldn't be putting hundreds or even thousands of dollars towards trading, maybe tens of dollars, right? Um, so let's think about how much time you need to put forward to learn finance or to learn how to trade and invest. It does take quite a lot of time. That's what I'll say for sure. What I would recommend though is if you haven't already, take an introductory economics class. Um, if you want to pursue finance as a career, I would definitely recommend that. But for this course, we're going to provide some key economic concepts, but we're going to kind of ignore some of the random ambiguous information that, like the theory, the things that people came up with hundreds of years ago. We're going to ignore that. We're going to go straight down to the basics of trading and investing. Lastly, are you stubborn, right? So are you going to put your money into a stock? I mean, you're not probably going to know this right off the bat, but are you going to put your money into a stock, see it go down, but then think to yourself, oh, it's going to go up for sure. It goes down further. Or, oh, it's going to go up for sure. Goes down even more further until the stock is basically worth pennies, right? So what you have to make sure is that you have a mentality that's based on only on the movement of a stock and rationality, right? That's impossible for a human being, but minimize your emotion when making trading decisions as much as possible. In regards to age, right? If you are not of legal age to have your own individual brokerage account or any trading account for that matter, don't don't be discouraged. I mean, you can always learn, right? Like you can be any age to learn how to trade and invest. And don't think that once you turn 18 that you suddenly have all the knowledge that comes along with being like having to trade, right? Like you're not going to suddenly know how to do analysis. You're not going to suddenly know how to do charting tech or know charting techniques. I would recommend that you get all of that information compiled before you turn 18, so that once you're 18 and you're super excited, you can go right off the bat. All right, so what are we going to go over in this course, right? So we're going to go over, as I said earlier, the dynamics of the financial market. So this involves a lot of economic concepts, both micro and macroeconomics. Next, we're going to go over technical and fundamental analysis, which we'll cover a lot in the next lecture. Then we'll talk about the best strategies for entry and exit on a stock, the basics of money management, your style, which actually comes along with a little bit of trading practice, how to engage in entrepreneurial pursuits, differentiating between useless and useful information regarding the markets, how to work smarter, not harder, and how to control your ego. Right. So all of this is we're gonna go over this over the next 6 weeks, but even after, there's so much more to learn, right? And even the best money managers, they still learn things. Maybe not every day, but like the saying, you learn something new every day. But they do learn all the time. From each trade, they make a new. From each trading decision, they gain some new knowledge. All right. So all of this, I'm going to say right away, is not something that school wants you to know. In my opinion, school makes good employees, not employers. If you have read the what is that? The book called Rich Dad Poor Dad. This is actually a concept that Robert Kiyosaki goes over a lot, right? So schools, they create very good employees. They teach people to live by a schedule. They teach people to have lunch at a specific time, wake up, have a good routine, right? So this makes a great employee, right? An employee that doesn't go to sleep late, always has a set schedule and doing things, very systematic, right? An employer, on the other hand, lives by his or her own ideals, standards, and schedule, right? So all of this is sort of an entrepreneurial thing, right? Are you the person who's going to live off of a paycheck in the future? Are you going to just depend on your paycheck, depend on a raise? Or no, are you going to be the person that goes after financial freedom, right? So a lot of trading involves a lot of effort. Are you willing to put in that effort, right? So don't be an employee, right? Don't be an employee. I do not want to be an employee personally. I want to be an employer. And trading sort of the financial freedom that it might provide me, that's going to get me there, right? So don't limit yourself to what you are at already. Just keep learning. And when you are of age, as I said earlier, of 18 years old, get right into it. Get right into it. All right. One of the key things that really bothers me is that people don't know the difference between trading and investing, right? So there are actually differences if you didn't know that. So trading, we use that term when we're referring to short-term investing, right? So if you're holding onto a position for maybe a few seconds, minutes, hours, or days, maybe up to like a few weeks, that is considered if you are considered as a trader, right? So this overall is the case that you are in short-term buying or selling actions. On the other hand, investing is more of a long-term dedication, right? So when you're investing money, you are investing into maybe a mutual fund, which we'll go into later, or anything. And we're hoping for long-term gains, right? There's going to be a little bit of choppiness getting there, but overall, once you get there, there's going to be a net capital gain, right? So that's something an investor hopes for. And what you'll find actually is that there are many investors. Many of your families probably have a portfolio or an investment portfolio, and they're holding onto that same portfolio, or it is managed by someone else. And they're hoping that they come out maybe 20, 30 years positive, right? Um, Trading, on the other hand, I think it's undertaken by much less people. Trading, it's a very high frequency task. It requires a lot of a lot of research, a lot of analysis. Because of that, I think a lot of people try to stay away from trading. Um, Investors do not really sell on short-term price movements, right? Like they're not going to see a stock move 20% up or down and then suddenly think, oh, it's my time to sell, right? This is great or this is dangerous. They don't really care at that moment, right? And that's for the most part. So if they see, let's say for example, the stock dives down 50% after they declare bankruptcy of liquidation, right? Liquidation from bankruptcy, they're probably going to sell the stock right away. They don't want to. They don't want to come out with negative. Like they don't want to come out zero. So for the most part, investors want to hold onto their positions for a long time, and come out with a net capital gain. All right. So on the analytical part of trading and investing, there's actually different strategies and skill sets associated with each. For trading, we're going to go into technical analysis. So that goes into charting and price versus volume, price and volume. Really just those three, right? I mean, the charts, of course, they kind of contain the information regarding price and volume, but that's all for trading. When you're investing, you can look at long-term charts, maybe perhaps of like a year or more, see how it moves according to what is that? Certain indexes like the S&P 500, see how it performs, compare, so that you can kind of predict where it would move in a certain economic climate. Yeah, so that takes us to investing, which is solely based, mostly based on fundamental analysis. So fundamental analysis goes over more of the qualitative information, like who the board of directors is, their experience even, um, like their income, their revenue, right, their operating income, right? So this is all part of fundamental analysis, right? So fundamental analysis, you're not going to really do that for trading. You don't really care about what, where, when, why of the company. You just care about where's the price right now, how much is it being traded, how's it going to move today or the next few weeks, or even less. And yeah, so technical analysis overall solely based on the price of a share and the volume of shares being sold, while fundamental analysis goes deeper, focusing on dividends, ratios, and other qualitative information about a company and its prospects. And of course, we're going to go way more deep into these concepts later into the course. Just hang tight for now. All right, now we're going to get to the fun part, which is buying and selling a stock and the steps associated with it. So if you want to make a trade, you got to make an online brokerage account, right? So you can go to Fidelity, TD, Ameritrade, which we're going to go into later. You set up an account there if you're 18, or you could sign in to a custodial account under your parents' name. From there, you would download an analytics application. As you can see right here at the top right, that is the Thinkorswim platform that I use. That's actually a screenshot from my platform from TD Ameritrade. As you can see there, they offer chart. They also offer like word analysis, financial reports, and even a TV network that's constantly live. And in terms of doing research, you should always create a watch list, right? Creating a watch list is very important because you want to see at this moment what stocks are being traded, right? Like, oh, what stocks are the biggest movers right now? That actually might be an indicator for an opportunity, right? Next, you want to check the price and volume daily. That's kind of part of the watch list. Next, you would want to do analysis. This is specifically for charts. That's specifically for trading, high frequency trading, while ratios and fundamental analysis are for long-term trading, as I mentioned. Finding the entry price is also very important. You don't want to buy in at the high point in a time interval, right? Like you don't want to buy at $50 when it was $40 like a second ago. So this is when you create limit orders, right? Never buy at the market price. When you start getting into trading, you'll find that there's options for whether to buy at the market price, or you can set a limit order, meaning if it gets to this price, I'll buy, right? So you want to find your entry price, and that all comes from chart analysis if you're doing short-term trades, or ratios and fundamental analysis, and long-term movements if you're trying to invest. And from there, once you have before you have a holding, you want to determine where do you want to exit this trade, when you want to sell your position. You don't want to be that person when you're holding onto a position thinking, oh, should I sell it now? Should I sell it now? No, you want to have a predetermined mentality. Oh, I will sell at this point, even though it might go up further. I'm going to be content with what the gains that I have at this point, because you don't know. It's all ambiguous. You don't know if the stock is going to go down right after you sell it, or a day after you sell it and go up even further. You don't even know. So this all has to be done before a trade. You don't want to be stuck in that mental situation where you have two conflicting opinions, right? So just have all of your entry and exit prices determined before you make a trade. And yeah, just as a side note, we'll spend most of our time on steps A, B, and C next lecture, including creating a watch list, checking price and volume daily, and analysis. All right, so getting started with an account. There are so many videos online about this, but there are many different online brokers for stocks. Namely, there are Fidelity, TD Ameritrade, Charles Schwab, Robinhood, which includes many younger users, and E-Trade. I personally use TD Ameritrade, and I believe that their Thinkorswim trading analysis platform is very, very powerful compared to the other ones. And if you are turning 18 soon, I recommend going for a TD Ameritrade account. By the time that you end this course, you should have enough information to make very educated trading decisions. And Robinhood is also a great one. That includes a lot of younger users, zero commission fees, I believe. For the purpose of the course, however, of course, I'm not going to be asking you to spend any of your own money. We'll be using a market watch simulator with a link that I'll have at the end. All right, yeah, so that brings us right there. If you can look at this link, type it in, And if you press join, you'll go right into the stock game. I have about 13 different people signed up for it. We'll see who joins in, and we're actually going to be competing with each other over the next 6 weeks, and we'll see where it goes. Thank you for attending. Next week, as I said, we're going to go over some analysis techniques, um, market watching, creating a watch list. We're going to go over all of that next week. Thank you.